My name is Alan White. I lead the Energy Project Financing Group at Lloyds Bank, where we've got one of the largest teams dedicated to energy project finance operating in the UK sector. To date, as you'll have heard this morning from Susan Rice, we've provided over £3 billion of investment into the renewable sector in total, and including within that around £500 million specifically to offshore renewables, which we're very pleased to be involved with that part of the business. We're particularly active in offshore wind, as I mentioned, and recently participated as a leading bank in the Links wind farm, which is the largest offshore wind farm to date. And we are the leading provider of finance as well to the offshore transmission system, the OFTO regime. The United Kingdom governments and in particular the Scottish Government have made significant commitments in relation to the development of renewable energy generation aimed at decarbonising the electricity sector, reducing reliance on imported fossil fuels, and utilising the resources that we have around our coastline, much of which remains currently untapped, and much of which obviously is around the Scottish coast in particular. Despite these commitments, the level of investment seen to date has been relatively low, with comparatively few developments reaching commercial operation for a number of reasons. And we've seen the statistics this morning in terms of the growth of the industry, but also the predicted slowdown in investment over during 2012 compared with previous years. But in an attempt to explore the reasons behind this apparent slowdown, this perceived lack of investment, I'm very pleased to introduce a panel which consists of some very highly experienced and knowledgeable individuals with involvement in the sector, including developers, investors, advisors, the Crown Estate and UK Green Investments. I'll ask each of the panellists to introduce themselves and their respective organisations, and then open up the discussion to questions from yourselves. And I hope that we'll be able to explore some of the challenges that are facing the industry and the development of offshore renewables, in particular in the UK, during the session this morning. We've got about 50 minutes in total, which I hope will give us time for plenty of participation and discussion. To start with, I'd like to introduce Mark Henderson. Mark is with LDC. He joined LDC in 2011, leads the clean tech and renewables sector coverage across the UK, and is based in London. He was previously with Investec, and he set up and ran the power and renewables energy team there. Prior to that, he was a senior project financier at SocGen and Dresner Kleinwort Benson. His experience therefore covers the spectrum of equity and mezzanine debt and project financings. And Mark, perhaps you could give a little bit of an introduction to LDC and its role.
Thank you very much. Yes, LDC is the private equity arm of Lloyds Banking Group. A lot of people don't know we actually have a private equity arm, but we've actually celebrating our 30th anniversary this year. And we've invested in over 400 companies in the UK, purely in the UK SME market. We've got a current portfolio of 80 investments worth about £2 billion. So we are actually a very significant, by many yardsticks, the largest private equity investor in the UK. But as people say, not a lot of people know that. We're very much a generalist investor. We've got 10 offices, including one in Edinburgh, one in Aberdeen, and one in Hong Kong. And clean tech and renewables is a new sector for us. We've made a few interesting investments already in the sector. But we cover the full range of growth businesses. And I say that because I'm perhaps different to some of the people in the panel here in that we're not trying to invest in just in individual projects or wind farms or solar PV arrays. We are actually invested in the businesses themselves, even if those businesses themselves are developing and acquiring wind farms and other renewable projects. So we are a whole spectrum investor, and looking very much at growth businesses, not startups, who are looking to grow themselves significantly over the next 4 or 5 year period.
Thank you, Mark. Next on the panel we have Vimal Vallabh from PwC. Vimal leads PwC's UK Renewables Corporate Finance Practice and Global Renewables M&A Network. He's got over 14 years' experience in the energy and renewable sectors, working in industry, investment banking and private equity, with significant experience of renewable energy deals and financing. Vimar was previously an investment advisor at Hudson Clean Energy Partners and vice president at Kelpting Singer and Friedlander Investment Bank. And Vimar, perhaps you could introduce PwC and your role within the role of the company, the firm within renewables.
Sure. So PwC, global firm, 152 offices we cover around the world. I sit in the corporate finance practice within PwC, focused solely on renewables. We cover fundraisings, M&A activity, and project financing advice to corporates, banks, and investors. We work across the assets and also across the supply chain, so companies that support the development of the assets. We have a network of 50 specialists around the world who focus on renewables, mainly in the markets that are growing rapidly, but we also, those individuals support the countries that are emerging in and around those countries. We have offices in the UK. We have a strong renewables practice here in Scotland, in Edinburgh, but also in London as well, where we service not just the UK, but also send our experts out into other countries to support them in advising clients on renewable activity. We're doing work in South Africa, Brazil. Most of the European countries have a strong practice in Spain and Germany, because that's the sort of where a lot of the renewables technologies emerge from.
Okay, thank you very much. Moving on to Dorothy Shepherd. Dorothy is from the Crown Estates and is the commercial manager for the offshore wind portfolio of the Crown Estate, responsible for the strategic development of commercial agreements with specific responsibility for project economics and financing strategic workstream. Prior to this, she was a development manager responsible for the management of the Moray Firth Round 3 zone, a joint venture company owned by EDP, Renovables UK Limited and Repsol Energies. She has over 10 years' experience within the energy industry, working in various roles in Scottish and Southern Energy, and has been a member of the board, sat as a qualification board member of the Institute of Chartered Accountants in Scotland. Dorothy, perhaps you could introduce or just give a bit of information around the Crown Estate's role on offshore renewables.
Thank you very much, Alan, and good morning everybody, and thank you for investing your time in listening to us today in this panel session on what for us all here is quite an important topic area. The Crown Estate, for those of you not familiar with the organisation, we are a very unique property organisation within the UK, and we manage the heritable property of the monarch. The asset value of the estate is around £8 billion, predominantly within our urban portfolio, but of growing interest and importance is the marine estate, where the Crown Estate manages the seabed up to 12 nautical miles, and under the 2004 Renewable Energy Act gives us the rights to lease items outside of 12 nautical miles for renewable energy. We are an organisation who ultimately kind of pays 100% tax, because all of our money goes back to the Treasury each year. So this year we returned £240 million, and over the last 10 years has returned £2 billion to the Treasury. So it's quite an interesting organisation. We are driven by our core values, which are commercialism, integrity and stewardship, all of which play an equal part in the work that we do. So why are we here today? Renewable energy of the marine estate, very close to everybody's heart here, and one of our potential growth areas. We are investing within offshore wind over £100 million of money, 70 million of which is in direct contribution to the development organisations in Round 3. In addition to that, we are investing approximately £30 million in enabling renewable energy within the UK, and this is the reference that Alan made to the strategic work streams, of which the project finance and economics is the one that I look after. So again, enabling activities to support a growing industry.
Thank you, Dorothy. Next on our panel we have Martin McAdam from Aquamarine Power. Martin has over 15 years experience in the renewables industry, including over 5 years as CEO of Aquamarine Power, a wave energy company rather, sorry. Martin joined Aquamarine from major renewable energy developer Airtricity, was the founder and CEO of Airtricity's North American operations and managed the sale of the company to E.ON in 2007. Highly experienced business leader, Martin previously held a number of technical and management roles in the utility sector and completed the advanced management program at Harvard Business School in 2004. Martin, perhaps you could give the developers viewpoint in terms of the role of new technologies in offshore renewables, please.
Yeah, great. Thank you very much, Chairman. The big challenge that the development companies have is crossing a very important threshold. We're at a stage where the lead developers have proven the technology at a significant scale. So, for example, Aquamarine Power, we now have our second generation Oyster machine in test at the EMEX site. And alongside several of the other developers, we're at a stage now where we need to cross to having a commercial offering. So the big challenge for us is to raise sufficient corporate equity to move from where we are to commercialize our technology. And over the next 3 years, what we'll see is that increasing number of development technology developers moving to a point where they're putting arrays in the sea, and that's both wave, as in our case, and also tidal stream. And our challenge in terms of financing is immediate and relevant today, and that's sufficient corporate equity to complete technology development. But one of the most important things that we're looking at is that in 3 years' time we will be financing arrays. So the second stage of our financing needs is associated with the project equity and the project financing that's going to be required to deploy arrays.
Thank you, Martin. Jeremy Biggs, next on our panel, is CEO of Narek Capital, a joint venture between the National Renewable Energy Centre and Asberg Limited, a fully registered financial services entity. Narek Capital is the UK's renewable energy accelerator, a public-private initiative established to leverage Narek's unique test asset base in order to de-risk and provide finance for renewable technologies and projects. Jeremy is also a founding director of Asberg, which focuses on direct private investments, primarily in the areas of renewable energy and sustainability. Over 10 years' experience of banking and investment management, and is a recognised expert in renewable and clean technology investment. Jeremy, perhaps you could give us an introduction to Narek and the role that you're looking to play in the industry.
Yeah, certainly. For those of you who don't know, Narek is the National Renewable Energy Centre. It currently is the world's largest testing base for offshore marine renewables, and it's based up in Northumberland in a place called Blythe, which is a very big deep water port on the east coast just outside of Newcastle. Built up over the last 10 years and, like I said, holds now a formidable set of testing assets. The joint venture arrangement between Asberg, the private investment house, and Narek to make Narek Capital was primarily there to facilitate projects in the renewable space going ahead, accelerate deployment timeframes, reduce cost per megawatt hour, and bring in the much needed capital into the sector that at the moment is stifling. Now we do that by 4 operating pillars that come together in a seamless solution. But the first one we do is we do some specialist consultancy, working with the projects, working with the technologies from an engineering standpoint, but also from an investment standpoint, to work out where the risks lie, to help the project shape their current business models to become more financially viable to the external investors. We then use a lot of the sort of data and analysis from testing the technologies or the projects to work with our partners, Willis on the insurance side, where we can feed that information in, and we can not only get the projects properly insured, but we can help to reduce the premium of that insurance. And the whole thing then leads on to the ability to go out into the open market and successfully raise capital for de-risk projects and the technologies within those projects. The reason why we're here today is the last part of that puzzle is that we see that there are still some hurdles to be overcome, some clear bottlenecks, some key enabling technologies that are required to be pulled through onto the projects to enable them to go ahead at pace. And we're just about to set up a fund looking to be about £50 million in size, and that will be based up in here in Scotland with some key partners aiming to invest directly into those elements of renewable technology, which we see as key facilitators for this industry moving forward.
Thank you, Jerry. And finally, Stephen Crane, who's a senior advisor at UKGI. Stephen has 24 years' experience in project finance at three of the market's leading institutions, Bank of Tokyo Mitsubishi, Royal Bank of Scotland and Deutsche Bank. His experience stretches across all areas of structured and project finance, including infrastructure, aircraft, shipping, oil and gas, and predominantly electricity, including offshore wind, and as I say, he's a senior advisor to UKGI. Stephen, perhaps you could give a quick introduction as to the role of UKGI or Green Investment Bank in offshore renewables.
Conscious of the fact that our chairman is giving a keynote speech to tomorrow, I don't want to steal his thunder as such. So what I'll do, I'll try and sort of skip most of the issues he's going to talk about. I thought, though, that I should say that whereas this session is linked to the offshore environment, I'm really here thinking about offshore wind, because it's been determined by government in consultation with Brussels that one of the priority sectors will be offshore wind and marine, for example. I know we have a responsibility to think about that. Marine is not presently a priority sector, but the government has the ability to look at the sectors which the Green Investment Bank is instructed to follow. And let's face it, the Green Investment Bank's role is going to be long term, and I would fully expect that the marine sector in due course will actually become a priority sector. But right now, that sector's evolving. I think we already heard from one of the speakers here. It's in the sort of early phases of its development, and we're all about sectors that are actually near to commercial and ready to go. So we tend to operate at the project end. UK Green Investments is the precursor to the Green Investment Bank. We're in that funny period where, possibly as early as next week, the Green Investment Bank will be able to be created. It can't be created at present until the state aid approval for the creation of the organisation is established. But with the chairman's here, he's here tomorrow, chief exec's been appointed, premises have been chosen, etc., etc. So all of that stuff is about to happen. But I'm here as a UK GI person. Offshore wind is the largest of the sectors. The investment challenge is pretty obvious. I've been here 11 months. I've got a pretty good idea, having sort of from my background and the work I've been performing here, what the challenges are in the near term and the medium term. I think if you look at the sector, that the major sponsors are the utilities. There are a few exceptions, notable and prominent exceptions, and they need to be encouraged, but the major sponsors are utilities. They're large organisations with plenty of money, but they haven't got enough money. They would acknowledge that. So if you were to look at their plans, and of course they're only plans, they're not the commitments, and what the government or the country needs to do to achieve its targets by 2020, there is acknowledged to be a funding gap. So our job is to assist in the mobilisation of capital to close that gap, to ensure that the 2020 targets are met. So just because our function here is to talk about innovation, let me just tell you in the short term where I think we can help. We can help those deals that have been out there for a while that actually need assistance to close out. So that's obviously a short-term aim. not the most exciting aim, it's a very important aim. If deals are out there to be done and they need assistance, the odd 20, 30, 40 million pounds here and there, then our role quite clearly is to help them, everything else being equal and all our conditions being met. But being slightly bolder, our aim is also to talk to people with ideas, and if we believe those ideas are very, very good, we can help bring those ideas to fruition. And I'd like to think that in the short term, there are some interesting opportunities where actually, rather than sort of getting involved from a debt point of view, we can actually invest equity in projects that actually, by cornerstoning an idea or a fund, we can help that fund gain traction, and the Green Investment Bank can be both the attractor and the rock around the attraction of capital. Just a couple of points, because I know Alan probably wants to take us into the discussion, but just by acquiring assets from utilities, if the acquirer is a new party to the sector, that's extremely good for the industry, because effectively you're introducing new investors into the sector. The utilities are selling to new investors. You're increasing the universe of owners in the business, and the owners gain confidence, the sellers gain confidence, the money is recycled back to the utilities, and the utilities gain the confidence that as and when they do develop, they can sell to a more liquid market in the future. So that's really what we're about in the very, very early stages. Looking further ahead, of course, we're interested in construction. We're not frightened of construction risk. We will look at construction risk. There's all sorts of issues that we can talk about during the course of the session: bank markets, bond markets, equity markets, etc. But I want to give an impression early on that we're very active. We've got some ideas. We're slightly frustrated actually that we can't make announcements in terms of what we have done and what we can't, and that's life. So Alan, I'll pass back to you.
Thank you very much, Stephen. As you can see, and as you've heard, we've got quite a wide-ranging group of experts and specialists here on the panel this morning, and I would encourage, therefore, as many of you to ask questions as possible in the time available to us. We should have a microphone available for anyone that wants to ask the questions. But maybe just to start the ball rolling, perhaps I can pick up on one of the questions or one of the points that Alex Salmon made in his speech this morning, and that was picking up on the statement by Ofgem last week around the shortage of, or potential shortage of capacity in the UK system, and asking what the panel's views on the impact of that in terms of affecting the development of offshore renewable energy in particular. Vimal, perhaps if I can throw you the curveball first off and get your reaction, and then we'll invite the other members of the panel.
I think the key term there is acceleration, and I'm reluctant to say yes, there will be acceleration because there is a shortage, because there is so much complexity involved in developing offshore wind farms, from planning permission to, there's no turnkey contracting solutions in place. So there's a series of subcontractors that need to be employed, and finding the competencies and the capacity to be able to fulfill that. And none of that it's not a tap we turn on and off. Some of these are small businesses. The foundation manufacturers, they're small businesses. Some of them are small businesses. They've got these plants aren't just there ready and available to kick off. They've moved. Some of them have moved into oil and gas because that's where the money is. So they've filled up capacity in their manufacturing lines. So as much as we look at I think it was the 4% figure that they've said, and say, we need to build offshore wind, we just can't turn the switch on and say, yep, right now we're going to go. I think it's a question of a whole series of things happening together. Government making planning processes take less than 2 years or 3 years that currently take place, and putting policy certainty in place so that then everybody else can react to it. So the turbine manufacturers say, right, we've got a 10-year visibility of what's going to happen in the UK market. We'll build a factory in the UK. And subsequent to that, all the suppliers to the turbine manufacturers can do the same. Mm-hmm. But without that absolute clear visibility, it's hard for everybody else to then put together their investment plans and move forward. So right. Acceleration, no, I don't. In my view, I don't think it's going to play that big a role unless that stimulates the government into
right.
revising and providing certainty in their policies.
Maybe I can pick up on one of the themes you seem to say there with Martin in terms of the developers' view of these sort of announcements, if you like, from Ofgem, and sure. how you see that affecting your side of the business.
Well, I think the biggest challenge that this 4% capacity margin identifies, is the fact that we have failures within the electricity market system. And the big challenge we have is the electricity market review programme. And as the First Minister indicated this morning, it's taken too long and there's too much uncertainty. I mean, what everybody who is going to finance a project here needs to understand is the level of certainty they have over the investment. So we had electricity market, which clearly there were areas in it which didn't work. So people were mothballing gas plant. At the same time, there has been tremendous pressure to bring nuclear into the energy mix here, and therefore there is a requirement to have nuclear somehow incorporated into the electricity market reform. And then we have the ROC review. So all of these coming at the same time as you're facing an energy shortage crunch are not good. What you need is decisions made rapidly, which will give the investors certainty in this area. I think it's a tremendous opportunity for the renewable energy sector. One of the things that's good about it, and despite what Vimal is saying, is that the lead time for getting a new renewable energy plant online is much shorter than that associated with some conventional plants. So we should regard it as an opportunity. But there are things which fundamentally need to be fixed here. We need the output from the electricity market review, and we certainly need to give certainty in relation to the ROC replacements.
Thank you. Jerry, I was going to say, Mark, do you want to sort of come back in terms of the sort of private equity investor and that side of things?
Well, I wasn't so much going to do that, but I was just going to make the comment. What I find shocking about this is that it's not the announcement that lights could be going out in 2015. It's the fact that the government have only just realised it because Ofgem announced it. We've all known about this for about 3 or 4 years now, and we were saying it could be 2015, could be 2016, but we all knew the lights were going out, and the government has to move quickly. And I've been in conference after conference all this time talking about how we're going to accelerate things to hit the 2015 shortfall, and bugger me, not much has actually happened. So I'm glad they've woken up to it. It is going to be very challenging to fill that hole. Personally, I think we should, as a private equity firm, look to invest in some candle manufacturing facilities. But I certainly welcome the fact that it will be hard to get things across the line to make that shortfall up. But the good thing is it will be a great impetus to get things moving. So I hope it will prove a good stimulus.
I must admit, I had a similar reaction to you when I read the announcement on Friday. Yeah. Dorothy, from the Crown Estate's point of view, are you expecting a flurry of activity in terms of as a result of these announcements?
I think it's an important point that the gentlemen have made today, particularly Mark there, that this isn't something new. It's something that people have been thinking about, and grid is a strategic area of importance to all our success, because these things, they do require large amounts of capital investment. Grid is often something which we kind of talk about quite quickly and then move off, unless you're an engineer, because we kind of assume it'll come along, and that's quite a dangerous assumption. So, again, the investment announcement earlier this year with Scottish and Southern and Scottish Power of the upgrade of the transmission assets is all indicative of the point that this is nothing new, but it is a significant challenge. And what we're talking about throughout the whole of these 2 days is the financing side of that, and where is that money going to come from, and how does the finance packages and systems that we may need for a transmission network dovetail in with that may be required for the actual wind farm itself. And then also not to be forgotten is the fact that grid isn't just about the offshore wet bits, it's the bit that are on land as well, because we have the onshore upgrade and infrastructure to consider too. So it's a really, really important point.
Well, Stephen, maybe from UKGI's point of view, in terms of the Green Investment Bank, does that open up opportunities or present greater challenges to the amount and the flexibility that needs to be shown?
Well, EMR was already underway before anyone sort of came on board under whatever flag they were wearing. I mean, we're really a bunch of professional people that have been around the block, and we are as experienced as anybody else, and we share the frustration that professionally speaking, not as a sort of corporate view, we share the frustration that it is taking as long as it is. It absolutely needs to be resolved. I mean, government knows this. I think they've probably, practically speaking, got until next June to sort it out. Absolute last date. And if they do that, I think it'll all be forgotten and we can move ahead. I think, yeah, you heard earlier the First Minister saying he would prefer the ROC regime to stay. Financiers the world over would have preferred that because it worked, it was complicated, everybody took a long time to understand how it did work, but it did work. But hey, look, the government's doing it for its own reasons. It thinks that it can reduce costs, and also it can reduce the attractiveness of the financial investors coming in if the end result is such that it looks like government and or electricity system risk. I just think we've got to trust them to get it right, and I'm sure they will get it right. But it's not helping the investment sentiment in the short term, and I think we're going to go through this, rocky period. I was in Copenhagen yesterday in the British Embassy, where you had a Treasury representative, a DEC representative, and various other people, and it's quite clear there's like this 3-month period that the government's got to go through to actually get it right, and sort of the left hand and right hand side's got to sort of finally meet in the middle and get something workable. And everybody out there, whether you're a leading Danish inward investor into the UK, they're all firmly of the view that it will be got right, but it needs to happen pretty quickly.
Jeremy, can the government get it right? Will the government get it right?
Well, that's a difficult one, but I'm going to give a bit of an optimistic view, and that is that I agree with Martin. There's great opportunity here through this prevarication by the government and this lengthy process. Every day this is going forward, this is creating more of a hole, and we're seeing coal-fired gas stations shut down, nuclear power starting to stagnate. Something is going to fill the gap. And this is a brilliant chance for the offshore community to come together and really start building this industry and putting itself forward, despite all of the problems that they're having. No other problems than any other part of the industry is having here. You've just got to get them right and bring it together and move forward and show you're a consolidated force, despite the problems. And, you could gain ground. If we don't, we'll lose out to a dash for gas. We'll see jobs going abroad. It's really time to pull it together and say, what can you do for yourself, not what can a country do for you.
Thank you. Questions for the panel? We've obviously got some other things lined up if need be, but please, it's your chance to ask some questions of our experts here. Anybody wish to put their hands up? No? Yeah, gentleman at the back. I'm not sure whether we've got a microphone, but if you can just speak up, that would be fine. Mark,
well, I think that's a good question. What do we switch off coal power plants? It would be a very brave politician who'd do that and have the lights going out. I remember the 1976? Remember it so well. Huddling around the candle. It's not a very popular thing for governments to be doing, so I can't imagine they'd willingly do it. Somebody said to me once that all this sustainability and carbon and renewable energy, it's a rich country's luxury. And whilst there's an awful lot more to it than that, in terms of expediency in government and politician movement, there is an element of that. So would you have the lights on and breach your carbon emissions, then yes, I think governments would do it. There is, however, one important consideration, which is that it's very hard to schedule the maintenance on coal-fired power plants, particularly as they get towards the end of their life. They need a lot of money spent on them, and that has to be very well planned, and a lot of lead time for the capex to take place. So you can't actually very easily say to somebody, right, in 6 months' time, when you were meant to be closing down, you've got to extend it for another 2 years. That just can't happen very easily. So people would need to start planning about now. My biggest concern is perhaps if people do see that as the power plant of last resort and do start asking people to keep their gas power plants open. As a coal, well, gas would be as bad, but coal even worse. So I hope the government don't go for that quick fix.
Martin? With you completely on the point, no government's going to turn off the coal plants. However, 30 years ago I worked in a coal plant, and in the last 10 years I've visited some of the larger coal plants here in the UK, and they're in a mess anyway. So it's not about are we going to turn them off. Nobody's investing anything in refurbishment or anything else. So they're going to stop working. It mightn't be in 3 years, but certainly in 5 years they're going to stop working anyway.
I think the other point to consider is the government, when it came out with its banding review, certainly there was a message in there that said, we will support you if you do a biomass conversion. So they might not shut down in the sense that they will no longer burn coal, but they may, I mean, we've seen Tilbury, there are others that are considering conversions to be able to burn biomass and therefore try and, I guess, meet the sustainability criteria and requirements at the same time as complying with the IED.
Down here on the right.
There's a calculation that shows that if you switched US highways to LED lighting, and 20% of the world's power is consumed by lighting, you could shut 43 coal power stations. So that would, if we adopted, as Obama has, a retrofit program for industry and commerce, the heavy users, utilities in particular, and you switch to LED, that would give your sector two opportunities. Number one, you could help the councils who can't afford to switch to LED with funding in the same way and take part of the market that ESCOs do. That would also create jobs in the LED industry, because this is durable, not the kind of stuff that's made in the Far East. That's architecture. And secondly, it gives the offshore renewable sector some breathing space, because you're going to mitigate the electricity demand. Why don't financiers grasp the low-hanging carbon fruit?
Yes, please do.
I'm hoping that we are. I think we do see that as completely low-hanging fruit. Last year we did a study of quite a few places, including a major port, and found magnificent energy savings just by changing the lighting alone, and then looking into LED production and where that was going, and manufacturing centres for LED lightings and different types of LED lightings that can be used by households and by industrial premises. And the other thing is we just work with we're just working with a big car parking scheme in the UK with a small LED lighting provider that's just won a national contract for replacing a lot of the car parking lights with LEDs, and that's something is on our investment radar. So no, we are noticing that, and you're right, low-hanging fruit, and can make a dramatic difference. What it won't do is give you all the power you need, but it will save elements of power.
There's an awful lot happening in LED at the moment, and the trouble is it's very expensive. There's a number of companies working, particularly in the UK actually, working on ways to actually reduce that cost significantly. So it is something which we hopefully will see more of. And obviously the most carbon efficient power plant is the one that's switched off. But
this one's for Jerry. Alan Loud, SKM, and the Offshore Renewable Catapult. You mentioned, Jerry, in passing, a reference to Willis the insurance business. Could you just give us some insight into the way that the insurance industry is thinking at the minute around about the pricing of risk, etc., in the offshore wind game in particular? Thanks.
The reason why we partnered with Willis was because we saw quite a lot of problems starting to occur within the offshore wind industry. And if you're looking at, on a generalistic term, the typical sort of OPEX of an offshore wind farm on insurance is 26%. That's fairly high. On a wave and tidal project, it can be 50% and above. And I'm sure Martin's isn't that, but you know, there are projects that are significantly costly in insurance levels. What's the reason for that? The insurers are just completely unaware of where the risk lies and how to deal with that risk. Previously, they've done a lot of work in oil and gas and marine sectors, but now they're coming over into the offshore wind space. They see huge opportunity in the renewable sector, but how do they get in there without losing their shirt with massive claims being exposed at the moment in time? And so it's absolutely paramount that they get greater learnings. They understand where the risk lies in the technologies. They understand where the risk lies in the projects, that the industry, to enable it, has to become far more transparent rather than manufacturers holding on to a black box full of information that will have to be shared. That's the only way we will start to get third-party insurance in the door and driving down costs. So the insurance element will become paramount. And if you're looking from a financing point of view, unless you've got a robust parental guarantee, which probably even won't stand you in good stead to get insurance for your project, it will still be very, very expensive, if insurable at all. Just to give you an idea, we did just we just insured our own Met mast, which was horrendously expensive, and really one of the first times that a Met mast has been insured in a certain way. We're just now insuring a floating Met mast, the first Met mast to be certified, coming over to hopefully be based in Scotland in the near future, and we managed to reduce the cost on that by 80%. The insurance cost 80%. Why? Because the way we got it brokered into the market, planning ahead, gaining the trust of the underwriters. So there is massive cost reduction to be there. You have to be able to speak the language of the insurers. You have to be able to tell them where the risk lies and get them on side right from the early bit.
Thank you. Gentleman at the back there. Mark, do you want to kick off with that one?
I'll try. It's a very detailed question. I think that what I'm just pausing on is when you said the last sentence there, what changes we would like to see. I mean, ideally no change at all, quite frankly, because the more changes, the harder everything seems to be, and we all take a collective deep breath and try and work out what the latest government changes mean for anything in the industry, and it takes a while for people to adapt and improve or even to work effectively. I would certainly like to see more companies working together in a supply chain, and Lady Susan Rice said this morning she'd like to see more partnerships, more collaboration. I think that's absolutely true. We haven't done that as a renewable offshore industry very well, I think. When you look at the offshore oil and gas industry, companies work very well together, and we still seem to be just group of collective different companies pulling in different directions, and so I think there could be a lot more partnership on a formal and an informal basis.
Chairman, just to respond to you, particularly from the wave and tidal industry, Andrew, I mean, I think it's very clear one of the things that we've not done well as an industry is be open and transparent about what the costs actually are. And of course, everybody feels that at this early stage in the industry, we're all competitors. And I've used this phrase before, you know, we're not fighting over market share at the moment. So in reality, I don't have any competitors directly for sales over the technology. But as Act Marine Power, we've tried to show some leadership in this area, and that's about talking about realistically where we are in terms of the technology development, but also what the cost of the technology in the early stages is. Why is that important? If we're not open and honest with the people who are interested in this, then when we don't deliver to those benchmarks, people will lose faith in what we're doing. A very good example of this for me was in the early days of the industry. The Scottish Government showed tremendous leadership and introduced banded rocks, 3 for tidal stream, 5 for wave. And the tidal stream guys, they asked for 3 rocks and they got it. And why did they get it? Because they told everybody, hey, listen, we're ready, we're commercial, you know, we just need 3 rocks, we're going to be there. And of course, after a number of years, they hadn't delivered. And then they said, okay, well, actually, we need 5 rocks. And of course, they've got that now. So I think it's tremendously important that we, in the wave and tidal sector, be just truly open and honest in terms of what our costs are. We all want the costs to come down, but today, you know, they're much higher than everybody would like them to be. I just want to go back to your point about keeping the pressure on the government. I mean, I think there is an issue here as well, particularly in relation to EMR. You know, the fact was that there was a structure which said, hey, listen, there'll be multi-party contracts, and then the select committee looked at it and said, come on, guys, this is ridiculous, it's never going to work. And then we had conflict over National Grid. Oh, they'll run the new market. And then there was, oh, well, actually, they can't because there have all sorts of conflicts as well. So I think the industry needs, perhaps we don't communicate to government and the civil service adequately enough to come up with a framework which has these fundamental flaws in it. It doesn't say very much about the way that we communicated what is actually required within EMR. So I agree with you. We need to be more transparent, but also I think we need to communicate better.
I just wanted to add one other thing and echo Mark's point is about the collaboration between the developers and the supply chain. Some of the people in the supply chain, they're actually quite, you know, they're fragile businesses and they're fairly small, and they're trying to emerge, and they've, you know, dedicated themselves to the renewable sector, but then they don't get any certainty as to, you know, when the contract's coming, how long is the contract going to be for, etc., etc. And not just visibility in terms of the contracting with these entities, these smaller supply chain entities, but also, you know, the burdens that the developers place on them. So one supply chain company I met recently was giving me the example of how they were tendering for, or they were discussing supplying to a offshore wind developer, and they were being asked to put in a 20%, I think it was 20% bonding requirement. And then they sort of said, well, you know, compared to oil and gas, it's 5. So, you know, there's these burdens being put on the supply chain that they just can't fund and they can't finance. And I think if there's more collaboration and closer collaboration with the local supply chain, I think that would help in terms of A, bringing costs down, but B, in terms of getting security for all those involved in building out offshore wind.
Jeremy? Yeah, so just as a last quick one. I think there are 3 areas where engagement can occur. Transparency, as Martin was mentioned, structuring, and the use of standards and standardisation with the industry. First of all, on the transparency side, the last thing that seems to come onto a project developer's lips at the moment in time is finance. So you're at the last end of the line. The project's already been developed and are coming out to you. That can't happen in the new world. You're going to have to think about, right from the start, how you're going to bring in external finance and engage with the financial community right up front. Have an open book policy and work work out how costs are going to be managed right from the start. No point in coming 3 years down the line when your project's ready to go saying, can I have a couple of £100 million? You've got to engage in that early process. Structuring is very important at this stage in time, especially as these projects are now getting larger. Project financiers, banking partners, debt financing partners looking through to say, what is the commercial structure that's standing behind these projects? And that's really important for the development community to stand up with a financer and say, how do we work this commercial structure? What is the contracting arrangements? How do we make these contracting arrangements work for the future? So we've got some underpinning and we can realise where the risk lies on those projects. And last of all, standards and standardisation. So at the moment, the industry lacks quite a few standards. A lot of health and safety standards, but no real performance standards. So we need to get those in place pretty quickly. And so the development of standards, the engagement with insurers, with the finance community to develop those standards will be key to stabilising the finance platform of the future.
Dorothy, do you want to pick up on some of those points?
Thanks very much, Alan. I was having a conversation with somebody just last week, actually, who from the finance community, who told me that the cost of finance is the premium that we add for risk. And that's quite an interesting sort of concept. And for me, I'd like to thank Andrew for bringing up the cost reduction task force report there. And for those of you who haven't yet had the opportunity to read it, I would urge you to do so, because within that quite important piece of work, there are a number of actions identified by the industry. One of those is to work with the finance community. For those of us in the room who are part of the finance community, to understand the renewable sector, to understand the challenges that the offshore wind developers face, to understand the challenges that Martin and his peers are facing as well. Because actually a lot of the costs around project financing are around this perhaps lack of understanding of what the risks are in this investment. And we see that with the insurance costs as well. You know, ensuring that we work together. This isn't a developer and project financing community. We all need to work together to ensure that we can get the best product and drive forward this this huge investment. It is a massive undertaking. We're talking about 2015 when we have this conversation about will the lights go out, will they not go out? You know, everybody in this room can contribute to the solution to that, whether it's speaking with finance colleagues over lunch or during the course of the 2 days, being open and honest in the developer community, for supply chain to work together and understand the performance data for turbines to help new entrants into the market who may not have that information at their fingertips on reliability that then helps them to gain cheaper finance. And for all of us in the room that have children, or even those who have husbands as well, how many televisions do we now have, you know, as to what we had 10 years ago? How many iPods and computers get left on? You know, we can think about how we ramp down our consumption as well as how we equally face the huge challenge of getting offshore wind and indeed wave and tidal and marine equally as important, maybe not today, but definitely tomorrow, to safeguard that energy supply and security of demand.
Stephen, do you have anything from the UKGI point of view in terms of the industry approach?
Looking at it as an industry professional and where prospectively the Green Investment Bank might be, if the Green Investment Bank is going to get involved in construction, it's got to understand the risks. And you know, I have a personal professional view that you know, there was the EPC experiment that's happened, and a lot of people wanted to go down that route, but the parties sort of weren't available to provide the service. So what happened after that is you ended up with this sort of frankly ridiculous proliferation of individual contracts with sort of 135 plus contracts. Well, that's okay if a utility is going to do that and it doesn't need to raise finance. But if actually there is going to be some thought in terms of attracting, you know, either equity investors into that, you know, and or raise individual external debt, then I think people have just got to think about ways in which they can package the construction, you know, not in a way that, you know, a conventional gas-fired power station would be done, but in a, you know, a sort of a 5 contract lot construction arrangement. And I think I'm quite encouraged by the people I speak to that, you know, people talk, and the report that Andy chaired, you know, that they talk about industrialisation. Industrialisation's got to happen, and it will happen. It's just a question of when. I mean, some of the big project management companies are beginning to express interest, and I think you get them involved, working in tandem with the utilities. And if the utilities, eat a little bit of humble pie, maybe, and they actually work with these sort of entities, I think you can probably improve the way, cost is controlled and the way the process is managed. Utilities have developed these project management companies from scratch. And they're clearly not perfect by any stretch of the imagination, so they've got to learn from that. So I think as we go forward, you'll end up with more experience, and I agree with the transparency point. People need to understand it, whether it's a debt provider, insurer. But if you want external investors, the people we're speaking to, most of them want to come into wind, offshore wind, at the operational phase, because they're just, they regard the construction risk. Let's be polite. The construction risk is a step too far at the present time. Let's just be very, very polite about it. But if we want them to get into construction, we need to get them into operation, get them comfortable there, and then the construction side's got to come together. There needs to be a series of positive stories, and so you can basically analyse the risk, look at the cost control, and form a view that it is a reasonable risk position for a financial investor to get involved earlier into the process. And that'll take time, but it's got to happen.
Thank you. Unfortunately, we're up against our allotted time. There's clearly a lot of issues, a lot of concerns and challenges for the industry ahead of it, and that it's trying to wrestle with at the moment. And I think we've really only sort of barely been able to scratch the surface this morning. I'm sure we could carry on for the rest of the day if we had the stomachs for it, shall I say, as lunch is about to be served. So I'd like to just thank our panellists this morning, and thank you for your participation as well. And thank you very much.